Let's chat then with Adrian Foster of Robobank, who joins in with his reading of the sell-off and the sharp sell-off we've got across the Asian screen. Adrian, thanks very much for joining in. And the Japanese markets have really, are clearly seeing a bout of profit booking, in light of the fact that we've run up close to 30% since the start of this year. Is the sell-off today just a one-off aberration, or is this a change in the trend, do you believe?
I don't think it's a change in the long-term trend, but I do think that the experience of the last couple of weeks, of course, we've seen quite dramatic or almost unbelievable rises, and now I just think we're seeing a deflation of that. And you can point to the domestic policy platform, of course, in Japan. We've seen this incredible stimulus and promises of more to come from the BOJ. And if you just think about, where can we find a playbook to look at how this maybe will pan out, then look at the US, of course, the last couple of years where we've seen the several bouts of quantitative easing from the Fed. And mid-2011, mid-2012, in fact, on 3 occasions there's been sell-offs in the major US markets of around about 20%. Really just a reversal of that QE-inspired boost. The markets, of course, then benchmarked, I guess, themselves off the underlying economy, found that the underlying economy in the US was reasonable enough, and indeed rallied again from there. So I think that's the sort of dynamic we're seeing pan out in Japan. I think the gains of the last month or so were pretty incredible, and now we're seeing a deflation of that, although I don't think we'll see a complete reversal of it. I think we'll look back in a couple of months' time, and I think Japanese markets will still be up, but not by the sort of 70 to 80% that we saw only, a couple of weeks ago.
Adrian, would you concur with the fact that the rising yen is just a minor reason as to why we're seeing this kind of a pullback, and sentiment has largely been driven by the fundamental concern of the Fed exiting from quantitative easing?
Certainly the Fed's in the mix there, and the data flow of late has been relatively firm from the US, although, of course, we've had a negative lead to deal with from the US and indeed from Europe overnight with market weakness there, but not particularly dramatic, but it has set a bit of a negative tone. I think a lot of investors are very cautious around this issue of QE withdrawal. I think after the experience of what was at 94, of course, when higher rates caused the bond market sell off quite sharply, I think the Fed officials will be very slow, firstly, to taper off their purchases, and I think actually reverse. I doubt they actually sell any of these bonds for quite a very long time to come. So I don't think that fears of QE reversal ultimately will pan out to be validated.